You are 9 years old, and you are translating for your mother at a bank in Houston. She speaks Tagalog and functional English, and the banker speaks only one of those languages, so you are the bridge. Your mother is trying to open a savings account. The banker is explaining minimum balance requirements and monthly maintenance fees, and your mother is nodding at the correct intervals, and you are translating in real time, trying to find the Tagalog for maintenance fee, which does not exist in her vocabulary because in the province where she grew up, the concept of paying a bank to hold your money would have seemed like a joke told by someone who did not need to be funny. You translate as well as a 9-year-old can. You get the account open. The minimum balance is $300. Your mother deposits $300 exactly and does not touch it for 6 months because the balance cannot fall below $300, or there is a fee. And the fee is $12, and $12 is most of a day's work at the cleaning company, and no day's work should go to a bank for the privilege of having worked it. You go home on the bus. Your mother holds the deposit slip the way she holds documents, carefully, in both hands, like something that could be lost. In the apartment, your father is making rice. He works the overnight shift at a hotel laundry. He sleeps from 8 a.m. to 3 p.m. in a bedroom with blackout curtains your mother made from an old bedsheet. They have been in Houston for 4 years. They have $300 in a bank account and a plan that has no name because naming it would feel like tempting something. You are 9, and you have just done something that most 9-year-olds do not do. You have sat inside the machinery of money and watched it operate from a seat that required you to understand it in 2 languages simultaneously. You understood it, you remember it, you will use it. This is your life at every level of becoming the first in your family to cross a threshold that nobody in your family has a word for. Every dollar earned in a country that was not your parents' country. Every door opened in a language your mother learned after 30. Every number that would have been unimaginable in the province, in the apartment, on the bus with the deposit slip held in both hands. Level 1, the foundation. You work. This is not a choice in the way that working is a choice for people whose parents have savings. You work at a Vietnamese restaurant on Bel Air Boulevard, bussing tables at 14 and waiting tables at 16 when the owner, a woman named Mrs. Nguyen, who has been in Houston since 1992, and who respects hustle in the specific way of someone who has survived on nothing else, promotes you because you remember every order without writing it down and you never make a face at a difficult customer. You save, not abstractly, concretely, in an envelope system your mother taught you because she does not fully trust banks to hold money that is not being watched. 1 envelope for college, 1 for emergencies, 1 for what she calls the future, without specifying whose. By the time you graduate high school, you have $8,400 in envelopes and a full scholarship to the University of Houston that your teachers say is exceptional and that you know is the only way the math works. You study accounting, not because it is your passion. Your passion at 18 is unrelated to income, and you are practical enough at 18 to understand the relationship between passion and income and to make a strategic decision accordingly. Accounting because it is the language of money and you already speak 2 languages, and a third one, if it is the right one, is worth learning regardless of whether it is beautiful. You graduate. No debt. The scholarship covered tuition. The restaurant covered everything else. Your parents come to the ceremony. Your mother wears a dress she bought at Target and altered herself. Your father takes 17 photographs with a phone that is 3 models old. You are 22, and you are the first person in 2 generations of your family to hold a degree from an American university. And the weight of this is real, and you carry it the way you carry all the weight, without stopping, because stopping is not in the vocabulary either. Level 2, the Credential, Big 4 accounting firm. Audit associate, $68,000 starting salary. The number lands in your checking account every 2 weeks, and for the first 6 months you stare at each deposit like a man checking whether a mirage is still there when you approach it. It is there. It is real. The office is different from the restaurant. The restaurant was hot and fast and physical. The office is climate-controlled and full of people who graduated from Rice and UT and SMU and who have an ease in rooms that you do not yet have and that you study the way you studied for the CPA exam, methodically, identifying the gaps, filling them. You are not inferior. You are differently prepared. You pass all 4 sections of the CPA exam in 11 months. The average candidate takes 22. This is not genius. It is the restaurant. It is bussing tables and carrying orders in your head and surviving Mrs. Nguyen's Friday rushes and translating at banks when you were 9. It is pressure metabolized into performance, which happens automatically when you have been doing it your whole life. You send money home, $500 a month, every month, starting with the first paycheck. Your parents do not ask you to. You do not feel it as a burden. It is the continuation of a system that has always been collective. Your parents invested in you with overnight laundry shifts and blackout curtains, and the return moves in both directions. This is not sacrifice. This is accounting. At 26, your net worth is $42,000, significant by the standards of what was in the envelope 6 years ago. Level 3, the pivot. You leave the Big Four, not dramatically. You give proper notice, you finish your current engagements, you shake the managing partner's hand and he tells you that you have a bright future and you say thank you and you mean it. Because he is right, the future is bright, and it is bright in a direction that is not this building. You join a mid-size regional bank as a financial analyst, $94,000. The job is closer to what interests you, not auditing other people's decisions, but understanding how capital allocation decisions are made and, eventually, making them. You have a manager named Robert who has been in commercial banking for 22 years and who teaches you, without calling it mentorship because Robert does not use words like mentorship, the difference between a credit that looks good on paper and a business that is actually sound. This distinction, once learned, is worth considerably more than the salary. You buy a house, $215,000 in a neighborhood in southwest Houston that is changing, Vietnamese restaurants and Salvadoran bakeries giving way to craft cocktail bars and a dog groomer, which means the value is moving in a direction your analysis suggests will continue. You put 10% down, $21,500 from the savings, minus the $8,400 from the envelopes which your mother makes you take back when you mention the down payment, pressed into your hands at the kitchen table with the expression of a woman who has been waiting for the correct moment to deploy a resource. You do not cry at the kitchen table. You wait until you are in the car. The house is yours. The mortgage is $1,190 a month. The previous rent was $1,080. The delta is $110, and the house is building equity at a rate that is not the same as $110 per month, and you know this because you are an accountant and a financial analyst, and you translated the machinery of money at 9 years old, and you have not stopped translating since. Level 4, the acceleration. The bank promotes you to senior credit officer at 31. $128,000 base, $22,000 bonus. You are approving commercial loans, small business credit lines, equipment financing, real estate acquisition loans for investors who come in with spreadsheets and projections that you evaluate with the specific skepticism of someone who has watched money move in directions that projections did not predict. You invest. Monthly, $2,000 into the 401k, $7,000 annual Roth IRA max, $800 into a taxable brokerage account in low-cost index funds. You also invest in the neighborhood. You buy a second property, a small fourplex on a street 6 blocks from your house, $380,000, financed at the commercial rate your position at the bank allows you to negotiate without impropriety. The fourplex generates $4,200 in monthly rent against a $2,100 mortgage. Net cash flow, $1,400 after expenses and reserves. This is not passive. You manage it yourself because property management fees are 10%, and 10% is $420 a month that belongs in the reserve account. Your parents move into a better apartment, not one you buy for them. They do not want you to buy them a place, which is a position you have negotiated carefully and ultimately respected, but you pay the difference between their current rent and the new apartment, $380 per month in addition to the $500. Total family contribution, $880 per month. You do not experience this as a constraint. It is a line item. Line items are manageable. Net worth at 35, $410,000. Not $1 million. Halfway. The curve your grandmother drew on a napkin. Your grandmother's is laminated in a desk drawer in Atlanta, but you have the same image in your head from a different source. The compound interest table on page 6 of the accounting textbook you bought used for $34 in your sophomore year of college. The curve is working, you just have to not touch it. Level 5, the business. You start a small commercial real estate advisory firm. 2 clients in the first year. Both referrals from people you approved loans for at the bank, who need help structuring acquisitions the bank cannot advise on directly. You do this on weekends and 2 evenings a week. The bank knows and does not object because there is no conflict and because you are good enough at your job that they prefer you with a side practice to you leaving entirely. Year 2, 6 clients. Revenue, $140,000. You hire a part-time analyst, a woman named Diana who graduated from the University of Houston 2 years ahead of you and who is, in the specific domain of lease analysis, better than you. You pay her $35 an hour and later $65,000 annually when the volume justifies it. You leave the bank at 38. The last paycheck is $10,700. You frame it. Not on the wall, in a folder in the filing cabinet, because your mother raised you to keep documents and because the $10,700 is a marker of something that would take too long to explain to anyone who was not on that bus with the deposit slip. Year 3 of the firm, $380,000 in revenue, $190,000 net to you after Diana and the office and the subscriptions and the accountant you hired to do what you used to do for other people and no longer have time to do for yourself? The irony of this is not lost on you. At 40, your net worth crosses $1 million. You are standing in your kitchen making coffee when you check the brokerage app on a Tuesday morning and the number is there. $1,040,000 across all accounts, plus $380,000 in home equity, plus the fourplex equity, plus the business value, which is theoretical until it is not. You make the coffee, you drink it, you text your mother the number, not the full number, a version of it that she will understand, which is, "Mom, I think we made it." She calls back in 4 minutes. She is crying. You are not. You are an accountant. You check the number twice to make sure it is right. It is right. Level 6, the complexity. The million is not a destination. This is the thing nobody tells you and that you could not have understood until you arrived. The million is an address, and at the address there are new problems, and the problems are better than the old ones, but they are still problems. The first problem is taxes. The business income, the rental income, the depreciation recapture when you eventually sell, all of it requires a tax attorney at $350 an hour. You spend $12,000 in professional fees in your first year as a high-income self-employed person to save $44,000 in taxes. Efficient, still $350 an hour. The second problem is the gap. You sit at a charity dinner for a Houston hospital and you feel something that is not envy and not imposter syndrome, though people will use that phrase. It is a calibration problem. You are fluent in 3 languages now: Tagalog, English, money. And the dialect spoken in this room is a 4th language you are learning in real time at 42, which is slower than 9. The third problem is your father's knees. 3 years of deterioration. A surgery at $28,000. Insurance covering 70%, remaining $8,400 manageable for your balance sheet, and complicated for the conversation. Your father spent 30 years solving his own problems, and the conversation about who pays requires a directness that costs something different from money. You pay for the surgery. You frame it as a loan. Everyone understands it is not a loan. This is the vocabulary of dignity, and you are fluent in it now. Level 7, the inheritance that runs forward. Your niece is 14, your sister's daughter. She is good at math the way you were good at math, quietly, natively, the way some people are good at reading a room. You start talking to her about money at 14 because you were 9 at the bank, and 14 is not too young, and nobody talked to you except your mother with her envelopes. You open a Roth IRA for her when she gets her first job at a smoothie shop at 16. You match her contributions up to $500 a year. You show her the compound interest calculator on your phone and let her drag the sliders herself until she understands why starting at 16 beats starting at 26 by a margin that makes her go quiet. Your own children are 7 and 10. You have been speaking to them about money since they were 5. Your spouse, Christine, who grew up in suburban Minneapolis with a 529 account and a financial advisor father, finds this slightly aggressive. You find it honest. The 10-year-old asks why some people have more choices than others. You say that is the right question, and you will answer it fully when she is older and partially right now. She accepts the partial answer with the expression of someone who knows and is storing the rest for later. Net worth at 50, $3.4 million. The firm has 5 employees. The investment accounts have been compounding for 28 years. The curve is still going. Level 8, the morning in Houston. You drive to your parents' apartment on a Sunday. They moved 3 years ago to a complex in southwest Houston, better than the one from the blackout curtain years, still modest. Exactly what they want, which is to say they want nothing large and nothing that requires explaining to their church friends. Your mother made arroz caldo. Your father's knees are better. He walks without the particular careful quality that the deterioration had given his gait for 3 years. You sit at their kitchen table. The table is the same one they have had since you were 11. Wood laminate, 4 chairs, a plastic tablecloth with a flower print. Your mother serves the arroz caldo in the same bowls she has used for 20 years. The apartment smells like garlic and rice and the specific combination of cleaning products your mother has used your whole life. You have $3.4 million. You are sitting at a plastic tablecloth eating arroz caldo at a table that has seen every version of you. The 9-year-old translator, the teenager with the envelopes, the accountant, the analyst, the founder, the person who paid for a surgery framed as a loan. The table has been in every apartment. It will probably outlast the apartments. Your father asks about the firm. You tell him. He nods with the particular attention of a man who has spent 30 years doing physical work and who respects all work, but pays a special respect to work that builds. Your mother asks about Christine and the children. You tell her. She asks when you are bringing them next Sunday. You say next Sunday. You finish the arroz caldo. Your mother refills your bowl without asking. This is the vocabulary of your family. Not asking, because asking implies uncertainty about the answer, and some answers have never been uncertain. You think about the deposit slip, the $300, the minimum balance, the $12 fee for falling below it. You think about your mother's hands holding the slip on the bus carefully in both hands. The $3.4 million is not a number your mother made. It is a number she made possible. The distinction is not small. The deposit slip was the first investment. The overnight laundry shifts were the infrastructure. The blackout curtains were the sacrifice that did not call itself a sacrifice. You made the million. But you did not make it alone, and pretending otherwise is a story for people who need the myth of the solitary self. You have never needed that myth. You have a plastic tablecloth, and a mother who refills your bowl, and a father whose knees are better, and a niece who understands compound interest, and a 10-year-old who is storing a question for later. The question will be answered. The curve continues. This is all it has ever done.